Hello and welcome to India Market Open. It's midweek and it's a tussle between the bulls and the bears. Global cues are weak, but the big story once again is RBI in overdrive after IFL Finance. It's GM Financial now.
Another evening, another notice from the regulator. Wow, I'm wondering what is happening in the Indian financial system right now, but also on the upside, an active regulator ensuring that everything is clean as we grow.
Yeah, some people yesterday were saying it's in overdrive mode as well. Who knows?
It's year end.
Yeah, the problem will be today 4 p.m. People will be wondering, okay, what's next?
Teesra kaun? Who's next? Who's next?
Who is next and what's next? I would say teen to ho gaye hain. There's Paytm, IIFL.
Yeah, but I mean 2 in 2 days.
And yeah,
there's IIFL Finance and JM Financial.
Yeah. So
that's worrying for the NBFC space, though, I would reckon.
And I think it's the leverage. I think that's what the worry is. Maybe we are cleaning it up, protecting retail investors. And I think that's always been the stand of the RBI, right? You've got so many new investors coming into the markets. You don't want to take any chances. And our regulator, of course, is ahead of the curve as compared to most. We did feel the crashes in the past much less than anybody else. So we've got to give it to them.
And just on the side, before we get to global cues, AMFI's action on distributors will have some bit of a bearing on some of those companies as well. We'll talk about it, but there's a lot of regulatory action happening there.
AMFI plus SEBI plus RBI, because they worked on this together, coupled with SEBI's move to cut froth in small caps. To look at it from the big picture.
And you know, we were talking about how post-earnings there was going to be a lack of triggers for the market.
Anything but
lack of triggers. It's only gotten busier.
If you're looking for global triggers today, they're not very positive. We told you yesterday that bulls are taking a break. Well, the bears are definitely not taking a break. You're seeing a bout of sell-off in the US markets led by tech stocks and your mega caps, which have been racing, saw a pullback. Not NVIDIA, though. NVIDIA was fine. But 400 points down on the Dow, the NASDAQ nearly 2% down. And it is tech stocks that kind of led that pain. Apple is the big problem. Microsoft slid as well. But data out by an agency called Counterpoint showed that in the first few weeks of 2024, about 6 weeks of 2024, Apple iPhone sales have plunged in China. Now, that is a huge issue on several fronts because it's telling you about what's happening, of course, with Apple and one of its largest markets, but also what the China story is. Yesterday, the Chinese government talked about how they want to shore up their GDP to 5%. That's going to look like a tough call. On the other hand, bonds were quite tepid. Bonds actually slid. The 10-year went down to 4.16% last I saw it, ahead of Jerome Powell's commentary today. He's actually going to testify today and tomorrow. Tonight is going to be before the House Finance Service Commission. Tomorrow is going to be in front of the Senate. He has to talk about what the Fed is doing to control inflation with rates, etc. And obviously, that's a large cue that the markets are going to watch out for. So ahead of that, bonds have been pretty, tepid. We'll have to wait and see what happens there. You wanted to make a point?
No, I just wanted to come in because at least me and Samina are diehard Apple fans. That what's been plaguing Apple's stock amongst everything else is also this whole AI piece. There's a lot of Apple investors, I'm sure, out there in India as well, and the lack of triggers plus core iPhone sales falling. So 2023, almost all the other tech stocks would have done what they've done. Apple has hardly done anything, and the problems pile on.
But that's a China problem. Look at Nike. Nike last quarter plunged because they were not selling enough shoes in China.
But for Apple, it's not just China. It's also this lack of AI.
Correct. So it's one of the largest markets in the world, starts sort of slowing down, and then that becomes an issue. So we were talking about bonds last. Let's also talk about Bitcoin. My. Another day, another record, but then a slide after that. So all-time high of $69,000 was hit on the Bitcoin. It then plummeted. I don't know if you can pull up that chart. Yeah, there it is. So, I mean, look at that pattern of where Bitcoin has gone. It slumped about 6% after touching that new high, but also an idea of what regulation can do when you have an SEC-backed system for investment like these ETFs has changed the story as far as Bitcoin is concerned. I'm going to just pull up Asia and, weak cues over there overall. They've mirrored what's happened on Wall Street as well. And let's pull up some of those key indices. The Hang Seng's doing okay, but Shanghai and Nikkei down in the red. So you might not see a very robust day of trade. We'll look at implied open very quickly. and see what Indian markets are set up for. You know that you're going to have a pain point in the NBFCs, but overall not too much in the negative as per the implied open at least. Fund flows, very quickly, nothing massively to speak about. There was some FII buying, 574 crores, DIs bought about 1835 crores. Focus on the financials today, Niraj, and NBFCs?
Oh, most certainly. And it's a 4-day winning streak snapped for the markets at large, even though the trend may be higher. So I think people will take notice of that. And yes, focus on NBFCs and finance for sure, because I think Chinmay pulled out its data and Harsh will talk about it a bit later on in the show. But at multiple points of time in the past, when the RBI has taken some action on NBFCs, the NBFC FinServ Index X banks has had some very strong corrective pullbacks, and I think that should make people worried. So, for example, somebody that I was talking to very early in the morning, a large investor, and we were talking about the city note on Awas Financiers and how Awas Financiers has also been bought by SBI Mutual Fund and Amansa, no less. And the view was that because NBFCs are currently in the eye of the storm, why go out there fishing in troubled waters? Because there are other pockets. So, that might be the case that near term, people might not want to touch NBFCs. Near term, by the way, there is a slew of 3 supply side triggers. One, a number of lock-ins opening, so that is a problem. The supply of mid-cap QIPs is the other thing, which is large and slated to come out in the next 2 or 3 months, especially in the next 2 months. And the block deals that investment bankers say are set up from companies in order to sell off some of the stake for whatever reason. So the quantum of supply that comes in the next couple of months at the broader end of the spectrum is very large. Maybe that is what explains why the small cap space hasn't quite given any kind of uptick or stability, even while the large caps may have been stable on a given day. Frankly, the last 7 days, the small cap index would have underperformed the large cap index. Just last couple of things. All upsides on Nifty IT are being sold into and needs to be watched out. So Jan 15th, Nifty IT made a top and then corrected quite viciously. Then Feb 12th again tried to rise, got sold into. We've seen a rise in the end of Feb, and then again the first 2 days of March or first 3 days of March, we've seen a bit of a pullback there. So Nifty IT, all kind of attempts at an up are being sold into. So it's a bit of a sell on rise kind of an index, presumably. So watch out for that one. And for all the conversation that fund managers are having around cement and dispatches and pricing power, consistent selling and short build up. So just yesterday, for example, if you look at Ramco Cement, Shree Cement, Orient Cement, at least on the FNO side, Ramco and Shree had massive short pile up. Look at that, 10% OI build up, 7% OI build up on 2.5% price correction. So somehow cement, for all the fanfare that it has around fund managers and the fact that there might be a bullish season ahead, if you will, the price action is suggesting something otherwise.
No, it is. There are areas and pockets of the market that do currently look oversold. And this month, largely, even though the future may look good, I think valuations is what the markets are concerned about, right? And that's what's been playing out in terms of stock reaction more than likely. Nifty PSU, though, seems to be in an uptrend, and that's what you want to be cognizant about. Yesterday, when there was a tussle between the bulls and the bears, PSU Bank stood out. They did gain in trade and so did auto. So 2 sectors that have defied the trend in that sense have been banks, some of those banking names and auto counters. But let's talk about stocks. If you've not already heard it, it is going to be a morning when NBFCs will be under pressure. This comes in as the RBI has cracked the whip on JM Financial. They have barred them from lending against shares and bonds. RBI has directed to stop financing against shares and debentures with immediate effect. This includes sanction and disbursing of loans against IPO of shares and against subscription to debentures. Remember, the banking regulator carried out a limited review of the books of JM Financial on the basis of the information shared by SEBI that has eventually led to this action. Of course, JM has said that they will be cooperating with the regulator and will provide all the information that is required, and has also gone on and said that this is an industry-wide practice. Now, whether the reaction is only felt on JM Financial or other NBFCs is something we will want to wait and watch. Like we've discussed earlier in the day, who could be next pretty much seems to be the big question that the street will be asking. But for now, a big gap down in JM Financial is what we are expecting. Along with that, it may take some of the other NBFCs lower as well. It could be another morning where IFL Finance may continue to see another weekday of trade after hitting 20% lower circuit yesterday. Today could be some more pressure in terms of trading activity. Well, apart from that, talking about stake sales, QIPs, and bulk deals at Zomato this morning, we believe Anfin Singapore is looking to sell 2% stake for $2,800 in Zomato. The price, I believe, the reports are indicating, comes in at a 4% discount to yesterday's close. So watch out for Zomato. It could be seeing a big deal or a big block deal in early minutes of trade today. So that is about Zomato. In terms of some good news, you've also got Wipro. They've completed the 20% stake acquisition in STVerse to strengthen their position as software-defined vehicle services. And this acquisition, remember, is not long dated, should be concluded by the end of the month. You may see a little bit of a positive reaction, while Niraj indicated that it's a sell-on rally for a whole bunch of these IT stocks. Who knows? Positive news flow for Wipro could actually help Wipro itself in terms of trade. So that's largely what we have. But like we've said, the morning belongs to NBFCs. The morning will be all about JM Financial to begin with. Be interesting to see if IFL Finance continues to sell out and what else goes lower. Bajaj Twins were also under pressure yesterday morning.
Yeah, Bajaj Twins, actually Bajaj Finance, Bajaj Finserv cracked about 4.5% on close yesterday. We'll have to see how much of an IPO loan book they have, if any. The fact is that what JM Financial does is not, exclusive to them. It is an industry-wide practice. So is this a bigger message? But we'll get to that. A few more stocks on the radar. JSW Energy is one that I want to bring your attention to. The company is signed, a unit of the company has actually signed a battery energy storage purchase agreement with Solar Energy Corp. The agreement is for 250 megawatt and 500 megawatt hertz of battery energy storage system. It's the first project out of a total of capacity which has been awarded so far, and they will be receiving fixed capacity charge of 10.84 lakh rupees per megawatt for 12 years. It's a project which is going to be completed in 18 months. So you can see it as a positive. Maybe the energy space has been good overall, barring the last couple of sessions, I would say. And this is positive news for JSW Energy. Not so good for India Bulls. So India Bulls put out a statement yesterday responding to an unfavorable verdict that they received. So MIDC issued a vacation order for the company. They had about 512 hectare plot in the Nasik SEZ, and the order directed them to now vacate it, essentially. They were expecting a favorable order on the hearing and were working on a proposed revival for this. They say that the order is unlawful and are evaluating legal options. Now, this is a bit tricky because when you have SEZ allocations, there are very fixed conditions of how much you have to invest and how much work you have to do within a certain time period. This is something that they will have to fight off, so could be sentimentally negative for a bit. Just the third stock on the radar is Havells. Havells India has officially announced its foray into kitchen appliances. They had, it was up in the air, but the official announcement has now come. They are going to be selling cooktops, hobs, chimneys, and other built-in appliances. And it's a synergy, really, with their small domestic appliances. So a natural progression, perhaps into a higher margin category. They aim to become the top 3 market player over the next 3 years. And these products will be outsourced and launched from May 2024. So those are my 3 stocks of this morning. Niraj, what's on your list?
Samvardhana Motherson is the other one, in addition to Zomato. The block deal in the stock was very active yesterday. Was up about 4 or 5%. Now, the base price of the block deal at 121 to 122. So that's a discount of maybe about 3% to the price of 125. To watch out for some of these block deal stocks. Viewers, remember, if the demand is good, then they recover very, very quickly. So that disclaimer for both Zomato as well as Samvardhana Motherson. Awas Financiers. Now, it's perilous to talk about an NBFC stock positively, but I'm still going ahead and doing that. SBI Mutual Fund bought about 63 lakh shares, and Amansa Holdings bought about 3% stake at 1370 a piece. Now, I mean, Akash Prakash is arguably one of the smartest investors out there. There is a Citi note today which has given a positive view on Aavas. Aavas is also a stock that has corrected already. If you look at the last maybe 6 odd months or thereabouts, I think from a highs of maybe, if I'm not wrong, 1700, 1800, Aavas Finances is currently at 1358. So it's not a stock that is staying at the highest level. It's come off quite a bit, and there is a positive note from Citi, and Amansa and SBI have bought into it. Let's wait and watch if Aavas does the unthinkable today, which is a large uptick in an otherwise troublesome period for NBFCs. And the last one is RBL Bank. Now, yesterday, because RBL and Bajaj Finance fell in tandem, a lot of people were extrapolating whether there could be some action around the credit card business or no. There's also this chatter, more important chatter was that could Bain, which has got a large shareholding in RBL, come out and sell. Now, the reason why this is interesting is because the key buyers in RBL, M&M Group and Quant MF, have stakes which are northwards of 3.5 and 4.5. So until they can't cross more than 5%. So if a large supply is to come in RBL, the one who are known buyers will not be able to go out and buy large quantities because they can't do it per se. And therefore, there was this fear yesterday that if the block is going to come, could it result in an overhang for RBL Bank? Now, the block is not happening, and therefore, watch out. If that was the reason, and that could well be one of the reasons why RBL fell yesterday, you might well see a bit of a recovery in RBL Bank today. So that is the other thing to keep in mind. While all the financial stocks had a bit of a problem, for RBL, this was the overhang rumor in trade yesterday. Let's see if there is a bit of a return. And just to mark that, just the price volume action in RBL or some of the others, by the way, RBL was down 6.5% yesterday. Volumes marked for delivery at about 2.2 times the 1 month average. And then there are the others. Network 18 yesterday, 5% down yet again. Volumes marked for delivery 18 times the 1 month average. And then the others, Balaji, Yuko, Tata Chemicals. I mean, all this Tata Sons play. By the way, guys, interestingly, there was an article that I was reading which said, from a sales note, I was reading this. It said that Tata Chemicals market cap before the rally or whatever, 22,000 odd crores, whatever, it has about 3% stake in Tata Sons, and that stake is about 75% of its current market cap. So no wonder Tata Chemicals had a bit of a rally.
Yeah, and then everyone is at the buzz about the Tata Sons IPO is really
very large,
an insane situation. Just one more I want to add is Mahanagar, gas, which I think we should put on your radar because they've cut CNG prices by 2.5 rupees per kg in Mumbai. So CNG, of course, becomes cheaper from March 6th. On MGL, CNG price cut of 3 rupees per kg was done in October as well. There's a Citi note which has downgraded Mahanagar to sell on regulatory risks on margins. They've cut the price target to 1405 as well. So they're worried, of course, because before elections, there have been statements which want to cushion consumers. And the fact is that there was a set of statements from the minister saying that end consumers have not really benefited from gas reforms. You have the companies and the gas distributors who enjoy high profits. He also went on to say that we are willing to take drastic steps if required to ensure consumer benefit.
Great. That word stood out for me. Willing to take drastic steps.
So, you have to temper it a bit with political rhetoric. Yeah. I would say. But yes, the fact is that at the end of the day, if you look at what people say versus what they do, one of my favorite things to look at, with OMCs, also another very political sort of space, at least the government of the day has let them be. So one can hope that of Mahanagar Gas, but right now these statements were a bit scary. To say the least.
I would somehow believe that this will lead to a fall in the stock price today for sure.
Absolutely. Today you're going to see a reaction, no doubt.
You're going to have very few gainers on the street anyway. But a quick mention, of course, we talked about India's inclusion in the Bloomberg index yesterday. But it'll be interesting to see how the debt markets continue to react. You may see a sentimental positive impact on the dollar-rupee pair as well. A weaker dollar globally will be contributing to a little bit of a gain on the local currency back home, and the debt markets will be in focus. But it's all talk about JM Financial this morning. What happens to the counter? What could this mean in terms of implications for JM Financial? I remember the stock has already been under pressure. It was down 2% yesterday. It's down 10% for the month so far. In the last 6 months, pretty much been flat. Despite decent earnings, valuation game for some of these counters like JM Financial is questionable. But I believe we have with us, Vishwanathan, who's joining us to break this down for us. Vishy, you've had a busy evening, not just day before yesterday, but yesterday too. And I'm guessing you're not here with us in person because you're expecting another busy one later today. But let's start with what happened yesterday evening.
Yeah, no, I've been joking about doing the morning and the evening shifts here. But there's a story that developed last evening with JM Financial coming out with a note, with JM Financial being barred by the RBI from lending against shares and debentures. The RBI said that it noted certain lapses in the way JM Financial was conducting its business, and that led to these restrictions. Essentially, what JM Financial was doing is that it was lending for IPO financing to some of its clients. Basis that lending, they were also taking a power of attorney from these clients to operate their investment accounts. Once they got this power of attorney, they were essentially acting as a lender as well as a borrower, because they were the ones investing and they were the ones who were taking money out as soon as the stock got listed on the exchanges after the IPO. What the RBI says is that these loans were being given out without any clear credit risk underwriting. Even the margins on this business were very, very low. And the RBI says that that was detrimental to the interest of the customers. And that's why they're putting these restrictions on JM Financial. After that, JM Financial, of course, came out of the statement saying that they believe that they've been doing what is standard industry practice, and they don't feel that they've broken any rules, and that they will work with the RBI on rectifying the problems that the Reserve Bank of India has highlighted in its note. Now, remember that this action against JM Financial is not a standalone thing. The RBI has been doing these actions for a while now. Started back in November, where the RBI said that credit risk weights on unsecured loans will be raised, primarily because it felt the RBI governor had already been highlighting that there was a little bit of froth in the system, needed to be brought under control. Then a few weeks later, the RBI writes to peer-to-peer lenders saying that some of your practices are not exactly kosher, so we will ask you to stop it right away. That was a one-on-one letter. It didn't get notified publicly, but then we do know from P2P lenders that the RBI has had problems with pooling of peer-to-peer loans by companies, and that was something that the RBI believed was against its rules. Then on the 19th of December, the RBI comes out with a notification saying that AIFs, alternative investment funds, which accept bank financing and then in turn lend to other borrowing companies, should be barred from accepting bank money. This, the RBI believes, was basically evergreening or round tripping of money that was happening with the banks. Then later, about a month later, a little over a month later, on the 31st of January, the RBI comes out with severe business restrictions on Paytm Payments Bank. What the RBI believes is that there is they have been highlighting problems for over 2 years at Paytm Payments Bank, which the bank's management had not fixed, had not addressed adequately, and that's why the RBI placed serious business restrictions.
Absolutely, Vishy, the regulator has been on a roll. This case is important because the SEBI has sort of tipped off the RBI in a sense, and they mentioned that very clearly. So it's a larger issue as well. Stay on with us. We're getting more perspective now from Gurmeet Chadda. He's managing partner and CIO of Complete Circle, joining us on the phone line this morning. Gurmeet, a very good morning to you. Thank you for coming in. And, the market today is going to be wondering / a little worried as well. A, who's next? B, how large the problem is. And if you look at what JM Financial's response is, the tone and tenor of the response, they're very clear. They're not even saying that there's been any kind of operational lapse or issue at all. They're saying that what we've done is par for the course. This is standard practice. And we're going to be talking to the RBI. How are you looking at this? Is this an effort by the regulators together to sort of curb these massive IPO subscription numbers we're seeing?
Hi, good morning. I think to be fair to RBI has been on a lot of issues, not just IPO financing. If you remember, it started with credit cards, with HDFC Bank being not allowed to onboard new customers on credit cards. There was almost a more than 1 year embargo on the digital offerings of HDFC. So it's not fair to say that it's only NBFC and banks. And then we saw RBI raising concerns on IPO financing in various forums. Mr. Das himself called some fraud building up in some pockets of the market. Obviously, he didn't mention IPO in specific. And then banks were given a cap of 10 lakh per IPO financing. NBFCs were called for 1 crore per individual borrower, and then asked to be more conservative. So I think RBI does a lot of internal dialogue. I've been a banker before taking more extreme steps, and I think they have been more proactive on anywhere they see any signs of system risk, like small ticket personal loans, like cards, like IPO financing, loan against gold. I think they've been on top of it. They don't want to repeat anything which has happened earlier with likes of the DHFLs and so many other instances without taking names. So I think regulator has been there. I think this would impact the NBFC sector. So yesterday we saw Bajaj Finance down 4-5% because Bajaj also does a lot of IPO financing, right? And earlier there was some impact because of the small ticket personal loans as well. So I think this has, in the short run, can have some impact on the entire NBFC sector as well, excluding maybe housing finance companies, I would say. And it may create a bit of an overhang for the short term. And also, widely market believes that banks are more strongly regulated and NBFCs have a regulatory arbitrage. I think that thesis also now gets challenged.
Let's talk about what this means for these NBFCs, these companies, and the IPOs that will be coming our way. For JM specifically, the top line is about 4,000 crores. 1,000 crores is what we're attributing this part of the business to be contributing. This is also a pause. It's not an end to leverage here for JM. So what do you do with the JM Financial stock if you're an existing investor and if you're a new investor? You'd mentioned that the Bajaj twins also got hit in trade yesterday. Do you think this could spread to other NBFCs? And if yes, which ones would be on your watch list?
Yes, as I said, the entire sector could have a short-term overhang because the market might be thinking who's next. Because all of this has happened too fast with Paytm, then IFL and JM Finance actually in quick succession. So I think there'll be some concerns. So that but my view is that these are the times you also get opportunities in well-managed, well-run NBFCs with great credit underwriting, and gold standard asset quality. I think it could be an opportunity, but that could be after some time. So I think banks would gain, in my view, vis-a-vis NBFC as a trade. If you look at it from a momentum-based investing perspective, if you look at it as on the hat of a value investor, there's some value emerging. So, for example, look at Bajaj Finance. The stock price is down more than 20% from 8,000 levels in 2021 to 6,300 odd right now, and the EPS growth has been 526% for 2 years. So technically, your earnings have almost gone up 50%, and stock is down 20%. Right? I've not seen Bajaj at 24, 25 times earnings and 20 times earnings for a very long time. Same is the case with some of the housing finance companies where I think there's a structural tailwind in terms of the new house sales, etc. So I would be looking at some of the well-run ones, the Cholas, the Bajaj Finance, if I get more price corrections, and some housing finance name, purely as a value-based call at these levels.
Yeah, 5 times price to book, certainly the lowest that we've seen in a while for BAF. Gurmeet, just one quick question for JM Financial in particular, right?
Yeah.
It means loss on newer business momentum, right? They might, these things are not difficult to correct, if you will. because these are practices, if you will, that believe that they have said that in their statement, they have said that they have abided by the law, etc., everything. But even if they had gone slightly overboard, it's very easy to pull back on some of these practices because they are internal. They know this business in and out. So in some sense, it's not as big a issue as it was for IIFL Finance, you reckon?
I would think so, Niraj. Also look at the valuations. It's what, 13 times, and the price has been sub 100 now for a while. Doesn't trade very expensive. But, as I said, there are two perspectives here. A, the way IPOs, small IPOs and etc. were getting leverage in finance in select counters. I think RBI found out, if you see that same set of investors, from some common set of investors rotating that money. And in some cases, Niraj, I don't know the current leverage, there were times where the leverage has been 40, 50 times, and that does create a risk. It can create a systemic risk if suddenly the market sentiment goes for a toss and you see 4 or 5 IPOs listing subpar and, the unwinding starts. Because in system, the unwinding can be very, very difficult to predict. So I think regulators, I just think these things take time to get resolved. So any RBI action, I have not seen getting resolved before a few quarters or a year. And that can lead to, a longer overhang, in that space.
Okay, Gurmeet, much appreciate your time. Thanks so much for taking the time out and being with us. That Gurmeet Chadda's view that some of the collateral damage that we'll see might actually see some value buying coming in. A bit later on in the show, Harsh will join in and tell us about the valuations, the way they are now versus 5-year averages for some of their major NBFCs. Stay tuned for that. Stay tuned, the FNO segment coming up next. I'm sure Agam will have some thoughts on what's happened in the FNO space and maybe some strategies too.
Welcome back. You're watching India Market Open. Quick look at the implied open before we get you a sense of what you can expect in the F&O space today. And that's going to be an important one as well. Slightly mildly negative, which is to be expected. Global cues are also pointing towards this. But Agam joining us and set for an exciting day, Bank Nifty expiry.
Yeah, well, so what's happening over the past few days is that it's becoming very, very hard to trade intraday expiries because of the sharp moves and a lot of jigsaw as far as your intraday moves are concerned. You know, with those whipsaws, in fact, taking out both the call writers as well as the put writers. I'll come to the options market in just a bit, but when it comes to the index, we have seen the index come off by a certain extent, 3% decline in open interest, so a lot of longs unwinding in the Nifty. And it's a completely different picture, an opposite picture when it comes to the Bank Nifty, because that's where we saw the index move higher. And we also saw an increase of nearly 9% in open interest towards what looks like fresh longs. So there's been a little bit of divergence between the banking index and the main index. Now, coming down to your options market, yesterday, we did see a substantial amount of unwinding around the 22,200 call. That's the only one that stands out in yesterday's day of trade, well, indicated by this big bar out here. And that also means that you did have a lot of investors or a lot of traders move out of certain positions. Where does that bring us when it comes to your overall open interest distribution? We're still looking at a roughly 800-point range. We have seen a little bit of strengthening of the 22,200 put as a support of sorts. And on the higher end, we, of course, continue to see a lot more writing around 22,800, 900, and 23,000. It's very unlikely that we will see 23,000 in this particular weekly expiry, but we like to see a little bit of resistance around 22,700 and 800 as well, which is not too far from current market levels. Moving on, the Bank Nifty is where we're seeing a little bit more interesting positions being built. Currently, keeping an eye on 48,000. That's where you have the most amount of open interest as far as calls are concerned. And that perhaps will be one level to keep an eye on. Well, notwithstanding, we are expecting some amount of weakness in the opening session. And after that, after we do see some amount of unwinding, the question really is, where do we go from there? So we just may see a move past 10.30, and that's something that we need to keep an eye on. That said, let's talk about stocks then. And well, naturally, Muthoot Finance and Manappuram Finance will be in focus. They advance in the wake of what happened to IIFL Finance. Samvardhan Motherson, on the other hand, also looking at longs along with Sun TV, RBL Bank, on the other hand, which should be in focus today as well. Looking at shorts building in, 6.5% cut there, mind you. And among stocks which saw unwinding, well, we are looking at longs unwinding in MRF and Hero MotoCorp, and short covering for BHEL, Page Industries, and Godrej Properties. So it's been, well, a mixed day of trade when it comes to stocks, and a divergence between the Nifty and the Bank Nifty yesterday. But the question really is, what do you do with this data and where do you go from here? Well, we have Aditya Arora of Analytics Research who's joining us on the show right now. Aditya, good morning. Thanks for joining in. Your view on the benchmarks as usual. Where do we go from here and what kind of strategies are you deploying?
Very good morning, Agam. I think the trend on the indices is pretty uncertain before the big event today night, where Powell will speak about various things. So that would act as trigger for the market. And as you rightly summed it up, there was significant increase in open interest of Bank Nifty futures. So that is suggesting that post today's event, there could be big move on either side. It could be a 1 to 2% move. That means almost 400 to 1,000 point move on Bank Nifty is what I'm looking at. So one good strategy which one could deploy is that by at the money call and put option of Bank Nifty for March expiry with 50% stop loss. So I think I'm looking for a very volatile session going ahead, not having any bias towards the market, because before the event, after the event, all the patterns get distorted. So that's my bias before this big event.
Right, okay, so not bereft of volatility, and to take advantage of that, Aditya is looking to, in fact, go ahead and buy a straddle. But moving on, Aditya, I believe you have a couple of trading ideas. Can you take us through them as well?
Correct. So I think metals are trading with positive bias, and in fact, they hit an all-time high. Various stocks like Tata Steel and Jindal Steel, SAIL, National Aluminium, all the stocks are doing pretty well. And so my strategy would be on SAIL as of now. Over there, I think that patterns and trend is bullish. So over here, 130 put can be sold at 2.15. 430 is the stop loss and 0 is the target. And the second one is Oro Pharma, something from the defensive space in this volatile environment. So in Oro Pharma, 1040 put can be sold at 16.70. 32 should be the stop loss and 0 is the target.
Those are two trading ideas for SAIL and Aurobindo Pharma. Remember that both these sectors have in fact done well. From the pharma space sector, you are seeing gains in Aurobindo Pharma, and of course SAIL on the other hand has also advanced. Though the leadership has been with Tata Steel and JSW Steel, you're starting to see a lot more traction in SAIL as well. So those are the two counters that we can keep an eye on. But on that note, Aditya, taking a moment to thank you for joining us and taking us through your views and giving us a handful of ideas. And with that, it's back to you all.
Thank you.
Thanks for confusing us.
You all, yeah. Let's.
Come on, you all.
Yeah. Okay, it's on me, is it? Okay. Thank you. Well, that is of course the F&O picture that we have as we're gearing up for trade this morning. Trading picks as well coming in from Aditya. It is going to be a tussle between the bulls and the bears. NBFCs will be in focus, and amidst this RBI crackdown on financials and the correction in the sector, are NBFCs still looking attractive? In fact, Harsh is standing by with some perspective on that. Harsh, what are you picking up on? NBFC in attractive space, I'm guessing it's going to be a morning of gap down. Should investors buy into that gap down?
Well, Samina, even prior to this, we've seen NBFCs trade at below their 5-year average price-to-book valuations, and that's exactly what I've tried to sum up. The graphic will come up shortly. Now, with regard to where some of the NBFCs stand, we saw a bit of a correction in NBFCs yesterday. Let me pull out some specific names. Bajaj Finance fell 4% yesterday, 3% down for Chola Finance as well. You saw around 1.5% correction in L&T Finance as well. 20% down on IIFL, no real surprise there, but 2% down on JM Financial at close yesterday. Of course, reaction awaited today. Those are some of the ones which got impacted yesterday in a decent-ish way. Now, in terms of where they stand on current valuations, we've pulled out Bloomberg estimates 1-year forward price to book versus their 5-year average price to book. And what we are seeing is some of them trade at a hefty discount to their 5-year averages. So you have Bajaj Finance trading at 4.4 times 1-year forward versus the 7.5 times, which is price to book 5-year average. It's quite a discount. In terms of some of the others, the notable ones, Muthoot trades largely in line with its 5-year average. Aditya Birla also largely in line. L&T Finance is above its 5-year average, but you're looking at an IIFL steeply below its 5-year average. Again, it has its set of problems. Manappuram Finance, almost 20% discount to 5-year average. Canfin Homes, another 10-15% discount to 5-year average. That's broadly the way in which valuations are stacking up. And this is an environment where growth is extremely strong. Asset quality is solid, especially for housing financiers, something like a Canfin Homes. And, you know, it's a time when rate cuts are on the anvil. So the benefit of rate cuts will start to, trickle down to NBFCs as soon as they start to come through. And therefore, you might have an opportunity pocket here, especially in some of the larger NBFCs, which is what even Gurmeet was alluding to.
Just one question, Harsh. Is what has happened in the past instances when there has been regulatory action? I mean, there is an index which shows the correction in NBFCs or the uptick in NBFCs, right? So, have such instances been met with a large corrective move in the following days?
Well, yes. So we've pulled out that data as well, Niraj. Interesting data which is coming through. In the past, when actions have, or rather, whenever RBI has acted upon specific NBFCs like an M&M Financial, we have seen correction within the financial services basket. Let me pull out the most recent example. During Paytm, when RBI imposed restrictions there, the Nifty financial services fell 1% on that day. We saw Shriram Finance correct by 4%. We saw Chola Finance correct by 4%, and Bajaj Finance also was down 3.7% on that day. And Nifty financial services over the next 7 days also saw a correction. So what we are therefore alluding to is that we've seen corrections in the past post RBI action. We had M&M Financial, which was caught up with RBI action as well in 2022. That fell steeply, and that has recovered also equally steeply. If you pull up M&M Financial on charts, what we'll see therefore over the last 2 years is it went to the sub 190 kind of a level, and thereafter it has recovered now to 290 rupees. So what we've seen is that the bounce back has also been equally strong, where companies are able to actually, or where NBFCs have been able to actually correct some of their processes, or where the impact has not been substantial on the AUM or the loan book.
Fair point. Harsh, thanks so much for that detail. Viewers, it's an interesting tussle today, and let's talk about that tussle with Sunny Agarwal, Head of Fundamental Equity Research at Sbicap Securities, and Amar Singh, Head of Advisory at Angel One. Amar, Sunny, thanks so much, both of you, for joining in. Amar, I'll start off with you. Do you reckon the financials are in a spot of bother? Could there be corrective moves on the Bank Nifty or the Nifty Fin Index or any of the NBFCs in particular based on the charts? Amar, the question is for you.
Can you just be a bit louder? I'm not able to hear you.
Okay. Amar, can you hear me?
Yes.
Okay. Amar, my question was, do you fear a corrective move in either the Bank Nifty or the Finance Index or any of the specific NBFCs in the session today?
Yeah, I would say that overall, if you look at Bank Nifty specifically, so there are some, I would say, good triggers as well as some neutral triggers. So the good part is that we've seen amongst the Bank Nifty, ICICI Bank holding up very strongly, trading at record highs. SBI is also doing fairly well, but HDFC Bank, which has the highest weightage, that's something which is not really showing much of attraction. So that is one cause of concern, which could actually effectively have an impact on, I would say, Bank Nifty. But now what we are seeing is that HDFC Bank has also formed a base, but it needs to sustain above the 1460, 1470 level for any upside trigger in Bank Nifty, because almost more than 30% weightage in Bank Nifty is from HDFC Bank. So that plays a significant role. Now, having said that, if you look at the other NBFCs, so amongst other NBFCs, I would say Bajaj Finance has, I would say, overall, we're seeing some sharp correction there. And this is one stock which is actually weak on the chart. So, so the next level to watch out for is somewhere around the 6200, 6150, 6200 level. So this again is one stock which one can look at accumulating after some correction. So this is on the NBFC.
Okay.
Stocks.
All right. So that's on the NBFC. That's obviously the big story of the morning. Not the only one, though. But I'm going to quickly get Sunny Agarwal's view on the NBFC space. We had a detailed report a few minutes ago about the valuations. Valuations now one side of the story. Regulatory action is the other one, which becomes unpredictable. If you had JM Financial today, Sunny, what would you do? Would you even look at a Bajaj Finance or a Chola as an alternative, or wait for the dust to settle?
Yeah, good morning and thanks for having me on the show. Yeah, definitely. So market has become a very fast discounting machine. There is a regulatory action and we directly see a kind of 10 to 20% correction in the stock, and very clearly a rub-off effect will be seen across the multiple NBFC today also. But what I feel is that if somebody take a rational view, I think two sectors which are relatively doing well on NBFC front are basically gold loan companies, which is again where basically there are two triggers over there. Gold trading at a lifetime high, which gives more headroom to the gold financing company to lend more. So a restriction on a big player like IIFL Finance will definitely benefit other larger players like Mannapura, Muthoot, or for that matter, a smaller regional bank like Federal or Catholic Syrian Bank, or for that matter, Karur Vysya Bank. So I think definitely this is a place to be in. Buy on dip can be one of the strategy which one can adopt on this front. And the second subsector which I feel is doing well is vehicle financing. So we all know that the entire two-wheeler and passenger vehicle segment is reporting a robust volume growth. And I think one way to ride this sector is through vehicle financing companies like Chola. So I think these are the few names which one can keep on radar as an buy on dip strategy. Obviously, a rub-off effect will be seen today across the NBFC, but we need to pick and choose if somebody is a medium to long-term investor.
Do you think are going to be badly hit, Sunny?
Sorry, your voice was not clear.
Which ones do you think are going to be worst hit among the NBFCs?
Again,
Sunny, can you hear me?
Yeah, you actually, your voice is not very clear.
All right. Let's check that. Let's take a very short break. Check all of our audio. Come right back. 12 on that question a bit. We'll also get Bank Nifty levels from Aamar Singh. All of that coming right up.
All right, back with India Market Open right here on NDTV Profit. Now, we haven't taken the stock ideas from Amar Singh first. So let's just first get those out of the way. It's about 8:50, usually the time when we get some ideas for our viewers. Amar, what are the stocks that you're recommending today?
So if I look at one is from the banking space, that is IOB, Indian Overseas Bank. So if you look at the banking space, what we are seeing is that the stocks did witness a significant rally, and then there was this correction in this Indian Overseas Bank from almost 80 levels. It came down to trade around 60 to 60, 63, 64 levels. And it has bounced back yesterday. So the long-term, intermediate-term trend for the stock remains extremely strong and positive, and this was a pullback which was a buying opportunity. So any pullback towards 65, 66 can be used as a buying opportunity with a stop loss of 61.6 and a target of 78, 78 on the upside. And the second stock to look at is IGL, that is Indraprastha Gas Limited. This is again one stock I would say was witnessing consolidation, and then this stock really didn't perform much because the stock, the moment it used to trade around 500 levels, the stock witnessed correction towards 380. Now we are seeing some positive build-up in the stock happening, and the stock this week itself is up by almost 5.5%, and it is close to taking out a crucial zone of resistance around 460 odd levels. So this is one stock once it reaches that level. So this is a good stock to enter into from a short-term perspective with a stop loss of 423 and a target of 494 on the upside. So this is another stock which can be looked at.
Just want to come to Sunny on the point about, of course, IGL is a technical call that Aamar has made on the charts. But we were speaking earlier about Mahanagar Gas as well, Sunny, and comments made by the minister about how the new policy hasn't really benefited consumers. Do you see some overhang on an IGL as well from a fundamental point of view?
I think, again, IGL, as we all know that the geography is limited to Delhi, basically. And the way Delhi government is pushing for electrification of the fleet over there, definitely IGL will, in terms of, long-term sustainability of the business, obviously IGL will be under doubt in terms of sustainability of a business. Another play which one can ride on this gas sector better than IGL is, I think, MGL, where it is a play on both PNG, pipe natural gas, as well as CNG. And at the same time, if you see the Q3 numbers, we have seen a decent volume growth over there. And I feel on a valuation front also, MGL is a relatively better bet as compared to IGL.
Might have a bit of overhang today.
Yeah,
because of the city note. But
maybe
overall,
that becomes a buying opportunity as
overall,
per
the valuations,
Sunny.
look good. All right, let's go across to Varsha now, joining us with more stocks that you should keep on your radar this morning. Varsha, what's on your list?
Good morning, Tamanna. So let's start with Sangvi Movers, wherein they've approved the incorporation of wholly owned unit. Now, they are entering into full-fledged turnkey EPC services, which they're going to provide to independent power producers, that is IPP. Then we have Centum Electronics, where they've received an order for realization of space-based EW payloads from DRDO. The size of the contract is almost 187 crores, which they need to execute within 16 months. Then we have NHPC, wherein they've started work on Jalaun Uttar Ultra Renewable Energy Park, which is in Uttar Pradesh. A company will invest 800 crores in 1200 megawatt renewable power park. Construction is to be done within 24 months, and this will generate almost 2,400 million units of electricity every year. Then we have IRCTC, wherein they've signed MOU with Swiggy to provide pre-order meals via IRCTC e-catering services. These services initially will be for Bangalore, Vijayawada, Visakhapatnam and Bhubaneswar stations.
Right. Thank you, Varsha. Those are a whole bunch of stocks that we'll be tracking in today's day. There's also the likes of an Aditya Birla Fashion that we want to watch out for. So while you have counters that will be reacting negatively to the news flow that we've got in terms of the RBI cracking the whip on JM Financial, it's 2 minutes to go as we get off a pre-open trade. We will get to see the first ticks very shortly. Well, Aamar, let's talk about a few other spaces, Muthoot and Manappuram. How are you going to be working with those two counters at this stage?
I would say if you look at Muthoot, yesterday was a extremely volatile session for the stock, and the stock ended in the red. And if we look at this particular stock, the stock has got resistance coming around the 1500, 1550 zone, because that's a very strong zone of resistance for the stock. Looking at the long-term trend, however, remains positive, but intermediate-term trend clearly tells me that it's more of consolidation which is happening in the stock. Downside, however, the stock is strongly supported around the 1250 odd level. So 1250 and upside 1500, that's the range which I see for Muthoot Finance. And if I look at Manappuram Finance, so so here the trend is slightly different, but here again it's on yesterday's I would say data clearly shows that a top seems to have been formed for the stock, and till the time we don't see the stock sustaining above the 200 mark consistently, I would say we could witness some sort of selling pressure. Downside support for the stock is around 170. So the range to watch out for Manappuram is 170 and 200. Yesterday was extremely high volumes, and I would say, so that tells me that a lot of activity has happened yesterday. So the top of 200, that's going to act as a crucial zone of resistance for the stock. Wouldn't recommend entry at the current levels in either of the stocks.
Okay. So a bit of caution there in either of the stocks, but I just wanted to add, conversations that we were having this morning with people in the industry, and Samina, you and I were talking about this, just decoding what the regulator is trying to do over here, and the core concern seems to be control of froth in the market more than anything else. What we're hearing from people is that there is more than meets the eye. It's not just about taking a power of attorney and then buying from the IPO or investing in an IPO on behalf of investors and then selling it, because that's been happening for a while, as JM Financial has also said. We're also hearing that small NBFCs, banks will be urged not to fund hyper-speculative IPO subscriptions, if not already. So there is going to be a bit of leaning by the regulator that let's put a break to this. So your 100x kind of subscription figures that you have been seeing in IPOs is something that's making the regulator uncomfortable, and especially what is being seen as maybe a dump later in the SME segment. So they're looking at it as sort of a proxy for a pump and dump kind of a situation, and that's where the concern is coming on.
And I think even players like GM, I mean, these are the front leaders in the broader market IPO space, right? I don't know how much information arbitrage exists, because if one arm of yours is doing IPO lending, which is a GM Financial Products, and the other one is actually the advisor on some of these investment banking or micro investment banking ideas, it becomes a very strong selling pitch. But one thing for certain is, while GM has said this is an industry-wide practice, for now it seems like they are in the ones that are dealing with the fire. And I think GM largely because they are the ones who've been, riding the wave of IPOs in the last couple of months. And we saw it in the earnings. We've seen the fact that they've led the way. So I guess if one arm knows,
look at
it becomes very easy. 20%? Yeah. Let's look at IIFL Finance as well while we're at it. It'd be interesting to see if there has been any recovery after. Ooh. Yeah, that looks like it's going to be a tough morning. 40% wiped out in 2 days.
Yeah, I mean, these rates, viewers, by the way, may change by 9:08, but I'll add
very
to this
likely
list.
This is what it's going to be.
Very likely that we could see a corrective move for sure. But even companies which are in the SME IPO space could actually have an issue. So I believe, if I'm not wrong, Orient Capital Markets is a listed stock and does a little bit of that. Maybe that comes. Okay, for now it's unchanged, but let's wait and watch what happens during the course of the day. So watch out for some of these. I'm not saying they should necessarily... Sorry, just finishing the point, that they're not necessarily the ones which will get impacted, because we do not know the practices followed everywhere, right? RBI has put up JM Financial, not necessarily that everybody else will be. But there could be business losses which could weigh in as an overhang on the stocks today. So bear that in mind.
Very quickly, and I don't know the answer to this. You've got a whole bunch of listings and IPOs that are currently open for subscription. With this coming through, do you think the subscription numbers would be affected and allotments hence could be affected?
Very likely.
It may, and like Niraj said, very likely, because your pipeline of funding is getting choked by this, right? Even if the notice or the action is for JM Financial, I don't think anyone in that space is now going to, without any worry, keep funding IPO investments in the same fashion.
So your Gopal Snacks, RK Swami, they would not be, because I'm guessing those shares are already allotted for. Yeah. Okay. So it's the new subscription paper that will be potentially impacted along with some of these counters as well. But yeah, that's literally the limited point I want to come in on. Niraj, you want to go back to picking up stocks? I think it looks like it's going to be a rough morning. But the market itself may not do too badly in terms of trade. You've got your IIFL Finance. It's going to show a 20% cut this morning. Let's take a look at Bajaj Twins. They were under pressure, like we indicated in late trade yesterday. No, not too bad. Bajaj Finance expected to see a flat start. Bajaj Finserv as well, trading marginally high in early morning trade. So I don't think the suspects that the market was suspecting yesterday are seeing any sort of a real reaction this morning. Sunny, you want to come in on anything that you're looking to add to your portfolio right now? There's so much of news, flurry of news that's coming in. But I don't know, maybe you want to take a step back. Any of the IPOs that are currently open for subscription you're recommending to your clients?
One IPO which will open today is the Gopal Snacks, and I think the company, if you do a relative comparison with the peers like Pratap Snacks and Bikaji, I feel the company is doing phenomenally well as compared to the peers. But on valuation front, again, the IPO is being priced at 45 times price to earning multiple. On ROE, ROC front, the company is generating close to 30-35% ROE, ROC, which we have never seen in basically snack business. But again, I mean, good business price to perfection. I think if somebody is looking for a long-term investment, then Gopal Snacks is the place to be in as far as IPO is concerned. And in terms of secondary market, I think there are certain wealth managers, like since we are talking about the broking and wealth management industry, I think Nuvama Wealth is one business where I would like to bet my money on deep today. The reason being that the way we are seeing incremental AUM for all these wealth managers, at the same time Nuvama houses the institutional equity business, at the same time investment banking business, trading at a relatively cheaper valuation as compared to other wealth managers like 361 and Anand Rathi. And at the same time, third quarter numbers were very robust. I think Nuvama is a place to be in if somebody want to add one stock in his portfolio today.
Anand Rathi, all those counters coming up. In fact, Anand Rathi has also been, I think a number of people have questioned the kind of valuations this one's been trading at. I mean, it's spectacular to say the least, but the stock really not letting up in early trade. Nuvama, those down about 2.5%. Aamar, any other trades that you're recommending this morning? One quick stock, either on the long side or the short side?
Yeah, I would say one stock one can look at is East India Hotels. This is one stock which continues to be very strong on the charts. However, we've seen some sort of consolidation, some sort of profit booking happening in the stock. The stock is around 425, 426 levels. So the stock has a potential to rally towards the 60, 470 odd levels. So any pullback in the stock can be a good opportunity. The stock has got very strong support below the 380 levels. So the closer one is able to buy towards those levels, the better off one is. And on the upside, one can look at around 470, 475 on the upside.
Okay. Now, two colleagues. Firstly, Sajid Johnson, because regulators are taking, as we know, or rather regulators are taking coordinated action against specific violators. Now, Sajid, can you fill us in on the details?
That's right, Niraj. If you look at the kind of action that has been coming in for the last 1.5 months, it's basically coming from the perspective of the kind of leverage which has been created in the financial markets, or especially capital markets, which is there. Whether it's in the form of the small and mid-cap companies which are going up, or the flows which are going into mid-cap and small cap mutual funds, or which is coming in the flows which are going into the higher volumes which we are seeing in options trading or derivative market which is there. The attempt is to ensure that the liquidity comes down, and that liquidity is now getting, because liquidity is high coming into some of the spaces in the capital markets. The regulators are taking targeted action against some of the players who are seen to be violating some regulations, so that they can bring down the leverage in the system, and by bringing down the leverage in the system they can control liquidity into the system. And that's what is happening, because it's not attempt to hit the entire industry with a policy or something, because then you find the entire industry coming up against the regulator, but where they're targeting specific players so that they can send a message across the system to multiple players that there is an issue with respect to the way you are putting leverage into the market, and that leverage has to be brought down there. We saw RBI coming out with some of the measures against JM, against IIFL finance for gold loans. The perception is that many of these short-term loans are making way into the capital markets, and that liquidity needs to be controlled, or the leverage which is being created in the banking system for the liquidity coming into the capital markets needs to be controlled, and that's the reason you're going to see multiple actions coming in. Now RBI has done it. There have been some talk about that SEBI will follow through with some of the actions against some of the players as well.
All right, thank you for that, Sajid. Just a quick look at where pre-open rates have settled before we go into more stories and the brokerage links section as well. So you're looking for a muted start in the markets today. ICICI and HDFC Bank showing a spot of weakness as per pre-open rates. Your Bajaj twins are doing okay this morning. Nothing spectacular, at least in the pre-open. Meanwhile, time to look at some research notes, brokerage notes. Harsh Saita joins us with the most interesting ones. Harsh, what do you have on your list today?
Well, yes, Tamanna, let me first start off with JP Morgan on Reliance Industries. What they're suggesting is Reliance Industries has outperformed the Nifty by mid-teens in the last 3 months. Whether that outperformance is sustainable or not, they believe that that outperformance is sustainable. They believe that Reliance has performed in bursts in the past, and that will continue going forward as well. The performance largely is linked with EPS, is what the note suggests. Now, 3 key drivers of EPS is what they're highlighting as part of their note. They're suggesting that one, the driver is refining margins, second driver is petrochem margins, and third driver now is telecom tariffs. And while the former two are not much in control of Reliance, the last one is what they've chosen to focus on. They believe that telecom tariffs are critical from a profitability perspective. Every rupees 10 change in ARPU will lead to a 5% impact on FY26 profit. Now, they believe that all the way up to FY26, ARPUs will go up by 10 to 12%, and that will therefore impact profitability, and there is that upside potential of it going beyond 10 to 12 as well. So a higher or a significant tariff increase could be a catalyst on the stock. Now watch out for that one. 3100 is the target price they've given as of now. Overweight rating maintained on Reliance. Quickly moving on, Investec on Muthoot. They've raised the target price on Muthoot from 1225 to 1550. Only on the back of the fact that IIFL, which is the second largest gold loan NBFC, has basically been banned from doing gold loans by the RBI. This restriction should therefore give a solid upside with regard to growth for Muthoot where gold loans is concerned. They in fact believe that 15% of IIFL's business will go to Muthoot. They've increased Muthoot's gold loan growth estimates for both FY25 and 26 by 4% and 7%. PAT estimates also increased by a similar quantum, and therefore they have repriced Muthoot 1.6 times FY26 is what they value Muthoot at, and based on that they believe that the price is 1550. Lastly, in terms of risk, they believe that banks are doing quite a lot of lending in the gold loan space, and that continues to be a risk.
Got it. Okay. Thanks a lot for that, Harsh. So one on Reliance, one on Muthoot, one on MGL, but the stocks that are reacting are the ones which are in news. So IIFL is down 20% at the end of the pre-open session. JM Financial is down 19.29%. And for whatever it's worth, IRB is down about 8% as well. So that stock, I'm missing the news here, but certainly this one is looking weak as well. Oh no, it's actually recorrected on the BSC. It still probably shows about an 8% downtick. Maybe I'm mistaken. Nevertheless, okay. Here's the question on stocks which have these slight dips today on the block deals. Sunny Agarwal, very quickly, 2 minutes left for market open. Zomato is flattish. Would you use any dip because of a block deal as an opportunity to add to Zomato?
Yeah, definitely, Niraj. So we have seen a consistent improvement in performance of Zomato, and it's a good opportunity to buy on deep Zomato in a medium to long-term portfolio with a price target of 200 to 220. I think both the businesses are doing well. Food grocery business which is being run through Blinkit, and at the same time food delivery business. So we have seen a consistent improvement in operating metrics for both the businesses, and I think it's a good opportunity to add in portfolio.
Very quickly, you want to come on MGL, 2.5% gap down is what the stock showing in pre-open. Do you think if we get that opening, shorting it at those levels could sort of be a good trade intraday?
Yeah, I would say looking at MGL, there is a formation of a double top on the stocks, but if you ask me, the trend still remains very strongly in favor of the bulls. So if there is a correction, again, it ideally should be used as a buying opportunity, because on the downside, if I look at MGL, it has got very strong support coming around the 1500 level. So 1490, 1500 level, that's a very strong support where we could witness some bounce back. Yeah, but on the upside, yes, 1570, 1580, it's more of a range play, but still being on the buy side is more sense. If it starts breaching the 1500 level, sustaining below the 1500 level, then we could say, yeah, that there is a trend change. Otherwise, still the jury is in the favor of the bulls.
Watch out though, the minister's comments kind of spell trouble for this one. Aamar, we have 20 seconds left for the markets to start. One top call post pre-open rates.
I would say one can look at NTPC. NTPC continues to remain very strong technically on the charts, long term as well as short term, intermediate term trend. So it's around 360 odd levels, significant high volumes which we've seen. But yes, only on corrections, this is one stock one can definitely look at. Important support for the stock, short-term support is around 330, 340 zone. That's a support to watch out for. Upside potential is around 380, 385 for the stock.
Got it. Thanks for that. Stay on, gentlemen. NTPC, they've said they'll construct a power plant in 4.5 years, and nobody thinks of execution risks. It's just quite amazing, the bull market phenomenon. But here's how the markets are starting off. Flattish to marginally lower, if you will, actually. 0.14%, you would argue it's flattish. Our banks and financial institutions correcting a bit. Nifty Bank, reasonably well behaved, 0.2%, so nothing too dramatic. Is IT correcting? Okay, mid caps. Let's stick with mid caps, small caps, and then go to IT. Mid caps, flattish. Small cap index was down yesterday as well and correcting in today's session too. We've seen a bit of a change in the fabric of the market, the texture. We're seeing small caps now starting to correct, and IT yet again is pulling down today. Bring up the heat map and let's see what the gainers are for a change first. Actually, hardly any gainers. No point looking at them. There is nothing really out there. Maybe a Grasim on the Morgan Stanley note, wherein they've maintained an overweight rating and a target price which is 17% higher. But otherwise, I don't see too many winners. What about losers though? Oh, actually not see too many losers either. BPCL down. To an extent, IT stocks like TCS, Infi, HCL, Techem are down. Wipro is down. That's the long and short of it, really. The good part is that, actually it's not a good part. Bajaj Finance yet again is the top loser. Though the losses are contained, but it is still amongst the top losers. So the downside momentum from yesterday continues for this one, but more red than green. Not much on the index. The action clearly beyond that, Tamanna.
Bajaj Auto in the top line and Bajaj Finance in the bottom line, just like closing yesterday. So you're seeing a bit of pressure over there, but obviously we have to start by looking at what's happening with JM Financial. And yes, we saw a lower circuit in pre-open rates. That seems to have continued. It's going to be a tough day. Remember, yesterday IIFL Finance had a con call to try and explain to investors what's happening. You've not seen that with JM Financials. They put out a statement. Okay, so no longer on the bottom circuit, but about 17% down. IIFL Finance, which saw the regulator crack down on their gold loan segment and stop all of their gold loans, is still about 20% down. So that financial space is feeling the heat. I just want to pull up Aditya Birla Fashion. Caladium Investment has exercised the right to convert all 6.6 crore warrants into equity shares. It's being seen as a positive on the street, about 2% up in morning trade. Mahanagar Gas is another stock that was on our radar. More of, I would say, policy overhang than anything else. And coupled with a city sell call. That stock in the first few minutes of trade has seen quite a sharp cut because it wasn't in such bad shape pre-open session, but now about 8.5% on that city sell call. I'll just tell you what Citi is saying, and the target price they have given is 14.05. So some ways to go before they get there. Tata Investment, if we can pull up by any chance, because you've already seen the Tata Motors play being positive for Tata Investment, third day in a row at 5% on Tata Investment. So those are some of the ones that we can pick out. But fewer stocks today showing that kind of range. If there is news, then fine. Otherwise, you're seeing that range-bound kind of situation continue, isn't it?
No, it's Tata Investments. I just can't get my eyes off it. Another 5% up move on the stock. I just don't understand what the stock is of the opinion or the belief or what is riding it, but a 5% gain once again this morning. Let's pull up that counter and see what it's done in the last 1 week. It'll give you a sense of why this is becoming such a talking point. It's up 200, now nearly 300% in the last 6 months. The stock itself has been hitting upper circuit every single day in the last few days, and this too seeing a 5% up move. So for the month, for the week itself, it's up anywhere in the range of 25 to 30%. And there's no relenting. This one is refusing to bend at this stage. Remember, it's an incubator. It's a holding company that trades at a premium, contrary to other holding companies that usually trade at a discount. But that's not keeping it down even this morning. The stock seeing an up by 5% up move on Tata Investment. Well, let's take a look at some of the other names that we are seeing. Bharat Dynamics, after a little bit of a break over the last day or two, is up quite sharply. Not sure what's happening here. 3% on Bharat Dynamics, sharp up move from the get-go in early trade this morning. Muthoot, once again seeing a good morning. 3.5% high on Muthoot is what we have. Muthoot Finance up 3.5% on back of IIFL Finance's loss. Industry believes that could be a gain for the other gold lenders. 3.5% on Muthoot is what we have. Data patterns continues to look good. Infibeam having another good morning. If I can get Zomato on the screen, that should be helpful to see what the stock is getting up to. There was a block deal that we're anticipating anytime now on the stock where Ant 3% lower. So that was coming in on expected lines. We will get updates whether or not Ant has executed that transaction. But for now, 3% cut is what we have. Samvardhan, if we can pull that one up to another block deal on that counter. Let's see if there's a reaction. The stock was up 4.5% yesterday. No surprise there. 3.5% cut coming in as the promoter looks to offload some amount of stake there. But apart from that, apart from Tata Investments, on the sell side, JM, IIFL Finance, Mahanagar are topping your list. Capri, I know Niraj mentioned this yesterday, 20% up move, back down this morning, 5%. So the stock has been very volatile. I think it was down 30 to 40% the last few trading days, recovered 20% yesterday. Now seeing a cut of another 5% this morning. But apart from that, I think that's pretty much it, guys. Tata investment is what I want to know, Niraj. What are the traders saying? What are investors saying? What is the stock thinking?
No, we should ask our guests. But just, I don't know if either of you marked the wind energy companies third day on a trot now.
Fall again.
All three of them are down. So Inox Wind naturally, so as a duo. And Suzlon, all three are down 5% yet again. So keep them in mind. I'm just very curious to watch what Network 18 and TV 18 have done. They were down 3 circuits on a row as well. I wonder if the positioning is down yet again. 3.5% down for Network 18, TV 18, another 2.5% down. So, yes, big thoughts there. But it's a good question, Sunny Agarwal. I don't know if you looked at Tata Investment Corporation, but if you have, what explains this up move?
I think, Niraj, basically the foray of Tata into the semiconductor business is one of the things which Street is expecting that few of the companies, that foray will be taken through this Tata investment. And at the same time, expectation of Tata Sons IPO, which is likely to be scheduled next year, maybe over the period of next 12 to 18 months. That's something which explains the up move in Tata investment. And apart from the normal holding companies which Tata are as of now holding in the portfolio Tata investment. In addition to that, I don't have any update on this company. Yeah.
I really do think we need to get a conversation going on this one. It's it's commendable, the move. And it's not just, we've of course just noticed it over the last few days. Correct. But if the stock has done 300% in the last 6 months, it's worth noting. They've come out and put a disclaimer saying that they've not made any investments in the semiconductor business. Now, of course, the listing of a Tata Sons, Tata Chemicals, I have no idea.
How do you play that story?
I'm just not sure what the story. I don't even know what the story is.
Possibly. I just wanted to draw the attention of our experts to the HFCs this morning, HUDCO or Awas Finance, and not too bad over there. I just want to see what a Bajaj Finance and a Chola also doing after the first few minutes of trade. Bajaj Finance down about 0.5%, and Chola not bad at all. Now the question is, and we talked about it this morning. Aamar, I'll come to you. What is the alternative if you want to be in the NBFC space, but on the safer side, or the financial space on the safer side? Yesterday we saw public sector banks also doing very, very well. Is there anything that you would pick here right now at these levels?
I would say if we look at the names which you talked about, Awas Finance, Bajaj Finance, Cholamandalam, more or less all of them are witnessing some sort of selling pressure there. And if you look at the trend per se, the trend definitely is from a medium-term perspective also, it's not very appealing, I would say. So one should rather wait out for at least in this space. Because what's happening is that we are seeing a lot of actions coming into play, and we don't know where the next action could unfold. So that is something which the markets really and investors would like clarity there. I think that's one of the reasons investors would be slightly, I would say, on guard with regard to companies in this specific segment.
And Aamar doing okay though this morning, but fair point over there. Sunny, I want to draw your attention to some of your PSU plays. PFC, REC not having a very bad day today, NHPC as well. And we've seen this consistently in the market over the last few sessions. What would be your top picks here? In fact, your OMCs are also showing some signs of recovery.
So among the PSU, I would like to go ahead with capital good companies like Engineers India, where we have seen a robust improvement in the order book. At the same time, the way all the oil marketing companies have planned the capex over the period of next 3 to 5 years, I think the direct beneficiary will be Engineers India, being one of the PMC project management consultancy firm. It's a very high margin business trading at a reasonable valuation. And at the same time, over the period of next 3 to 4 months, we are expecting a big win in terms of order for Engineers India. I think Engineers India is the place to be in if somebody is looking at a PSU basket. Another stock which I would like to ride among the PSU is basically through PSU banks like Union Bank and Bank of Baroda. We have seen recently a very tremendous response to Union Bank QIP, wherein the bank has mobilized more than 3,000 crore rupees. giving a lot of fire for in terms of growth capital, trading at a reasonable valuation close to 1.1 time price to book, and meeting all the expectation of 10 to 12% kind of credit growth and 11% kind of deposit growth, trading at a relative cheaper valuation as compared to private peers. So Union Bank and Bank of Baroda are another pick which I would like to ride on the PSU side.
Right. Just a quick mention on JM Financial. The stock, remember, opened with a cut of 19% in the first few minutes of trade, but it's actually marked a pretty sharp recovery. I'm calling it sharp, it's still down 14%, but it's 5% off the day's low point. So the market's probably trying to see beyond what this, RBI trough with the regulator really means to the company. It's still looking weak. We're not taking that away, but there's been a little bit of a recovery from the day's low point, which we saw in the early minutes of trade this morning. Well, along with that, Aamar, I don't know if you track Bharat Dynamics. The stock is doing a pretty good move this morning, and the volumes are also quite large. 2.5% to 3% higher without any fundamental news trigger. On the charts, have you picked up anything on BDL?
Yeah, if we look at this stock from a long-term perspective, it's I would say it's very strong, but intermediate-term trend and short-term trend, they clearly point towards consolidation. So the stock isn't really going to go up in a hurry till the time we see the stock clearing the 1900, 1950 zone. So it could be more for consolidation. But on any correction, this is a stock one can definitely look at. On the downside, the stock has got good support coming around the 1700, 1720 zone. So that's it's more of a range play because the intermediate term trend, we are seeing a significant decline in momentum. So still it's in favor of the bulls, but the decline in momentum and daily charts point towards selling pressure. So it's more of a range play in this particular stock.
All right. We will take a very short break and come back with more detailed coverage on what exactly the regulator is doing and what the overhang or what the indication is. Sunny, Aamar, thank you so much for joining us. Very short break. On the other side, we're joined by Deepak, Shenoy to talk about the regulator's action, joint action really, against financials and more. Stay tuned.
Welcome back, and that's the market for you. It's a quiet day of trade. There is a little bit of profit taking. There are pockets of pressure that we are feeling. There's some buying as well, but no trend as such that's emerging on the street. Very stock-specific action is what we are picking up on. Let's take a look at how the broader markets are doing. That'll give us a sense of the underperformance coming in from the small and mid-cap space, which is what we've seen over the last few days of trade. That's a little bit of a trend reversal of sorts, right? Because the broader markets up until now were the outperformers when compared to the benchmark. This morning, though, the small cap space down 1%, the mid cap stays trading with a cut of 0.5%. Well, you've also got some other factors to track. So you've got stocks that are in the news. So you've got your JM Financial that's leading its way down, not at the day's low point anymore, but still trading with a cut of 13.5-14% as we see it. IIFL Finance for the second straight day running sees a 20% cut. So 40% of its market cap has been wiped out on IIFL Finance. While we're at it and talk about regulators, take a look at 197 communication as well. Let's see whether there's been any sort of change there. The count is still trading weak, down about 2%. Mahanagar Gas, on back of a downgrade, the stock trades with pressure down quite sharply now, actually. If you can pull up Mahanagar, it'd be interesting. It started with a cut of 2% in the first few minutes of trade, now down 10%. So it's really taking it badly.
It's about 8.5% right after
market open.
open.
So just, yeah.
So was IGL. So was IGL, by the way.
Also,
not down 8.5%, 9%, but IGL is feeling the heat as well. Let's quickly pull up Indraprastha Gas. Now about 4.5% down. Yeah, it's had a bad morning.
It was good to question the guest on this, simply because what is MGL's loss need not necessarily mean IGL's isolated. Because if it's a policy move, and we should get that City Note graphics on air for our viewers who've tuned in right now to understand this. But what is if a minister is commenting on how CGDs haven't passed on the benefits to consumers, will it hold true for
not just the company,
MGL for
but the
sure,
sector,
but for IGL and GGL as well, even though their exposure might be limited relative to maybe a city
as a consumer
IGL.
of Mahanagar Gas, I'm happy if my gas bills go down. But if you're an investor right now, you will be concerned, as you were saying, because the broader issue really is that no company and investors do not like interference in the rules that have been set. So your free market system needs to work. That also, of course, is a concern we're seeing now in the entire NBFC space. The story of the morning, of course, is what has happened with JM Financial. I want to quickly pull that stock up for you now, about 13-14% down. So off its lows of the day. But to break down what the regulator really is trying to do, I'm joined now by Deepak Shenoy, founder at Capital Mind, someone who did a whole Twitter Spaces on this last evening. Deepak, thank you. I know it's a little early for you, but thank you for coming in and speaking to us on NDTV Profit, and for all of our viewers who are tuning in to understand what exactly is going on. Now, if you look at what JM Financial has said, and let me just set that context for a second. They're saying power of attorney is not illegal. Everyone does this. This is industry standard and industry practice. The entire sort of financial ambit of this is self-liquidating. I mean, you fund an IPO, they get an allotment, then you sell, get your loan back, and the rest goes to the investor. So what really is the issue here?
Thanks, Tamanna. I'll give you the context. This has been happening for a long time, more than 15, 17 years as far as I remember, because I first saw this in the Reliance Power IPO and I think there was another company at that time that was going public, and this was IPO financing. Essentially what happens in these cases is that they have, the HNI quota typically does not get easy allotment because it gets oversubscribed, right? So if you apply for, say, 50 lakh rupees, you might only get, say, 10% of it, or sometimes even 1% of it. So the idea is because it's proportionate allotment, it isn't like the retail segment where, they try to maximize the number of investors. Earlier, what used to happen was, SEBI has changed the rules and RBI has changed the rules since, but what used to happen was that they would, an HNI would say, listen, I have 5 crores. And then the NBFC would say, I'll give you, say, another 100 or 200 crores as a loan for 4 days. Now, this HNI may not be capable of servicing a loan for 100 and 200 crores. But the idea was that they would take a power of attorney, put this into a bank account that they controlled, so the HNI does not actually have access to the money. This was kept in the bank. ASBA was used to apply for the IPO. out of the 200 crores of application, only 5 crores would get allotted because there was so much oversubscription, and then the 195 crores would get taken back by the NBFC saying you returned that part of the loan. The 5 crores worth of shares were allotted were also sold usually, and whatever profits were made were used to pay back the interest of the loan for those 4 or 5 days, plus the profits were retained by the HNI. So effectively, it's a very highly leveraged game for the HNI, and which is why all this 100x oversubscription, 200x oversubscription makes no sense. It was just dummy financing. It's been happening. We did a podcast on this 2 years ago because there is a systemic risk in this. Because what if, for instance, the IPO gets stalled by, say, a court order, and then 4 days or 5, instead of 4 days, it becomes 4 months. The HNI cannot bear the interest cost for 4 months on a 200 crore loan. It's simply impossible. They were never assessed for that kind of credit. So this is a systemic risk issue. But now what RBI has done is not pointed out the systemic risk. They only said, oh, you couldn't have taken a power of attorney. That is not true. It can be taken, but I think the bigger problem is that this kind of thing shouldn't have been allowed in the first place. They stopped it in the middle, but now they've gone after one NBFC. I believe a lot of others have done the same thing.
Deepak, hi. It's also Samina joining in. So this is a very well-oiled machine, if I may say, right? For JM, especially a one arm that is leading the IPO business. They are the ones who are making hand over fist with all these listings that are coming in. So there's access to information. On the other hand, you've got your products that you're selling. So it's a very easy pitch to an ultra HNI is what I'm trying to ask. With this now bearing the brunt of what is happening across the industry, do you think this is going to have a material impact in terms of revenues going ahead? And also, more importantly, I think this is the pause. Or do you think this is the end of the game, more importantly?
To the extent that certain things had happened in the past, RBI had at some point put a pause to it, saying NBFCs cannot do more than 1 crore worth of IPO financing, which had kind of reduced that game a little bit, but then people still gamed it with other mechanisms, getting more family members, getting more dummy accounts and so on. But in general, this has now gone on to the SME IPO. So you see the SME IPOs where for a 40 crore IPO, you get a 5,000 crore subscription and so on, where the game is still going on. I think, of course, this will have an impact on revenues because it's not just lending against IPOs. I think it's also lending against securities, against NCD debenture IPOs, which are also happening. So that will also dent revenues. Perhaps in two ways. One is the financing arm itself, and secondly, the investment banking arm, where you would get access to an IPO if you were able to finance investors coming in the first place. Otherwise, you may not be chosen as a merchant banker, for instance, if you don't have access to it. But I feel that this will now hit the whole industry, not just them. We've noted how they used to borrow, these same NBFCs used to borrow for a 7-day commercial paper, just because the IPO used to be 4 days and they take a couple of days extra. So they would borrow for a 6-day or 7-day commercial paper at much higher rates than normal. So there's a downstream impact on the commercial paper market as well, and yields and so on. So I think there will be some kind of systemic impact, but also definitely impact specifically to JM because it was a relatively larger part of its revenue stream. But I think, to be fair, I've seen IPOs for 15 years. No matter what tools you do, people find a way to find leverage to come back into it. So I believe there will be some financial engineering that will happen across the industry.
So financial engineering aside, Deepak, will we see the kind of subscription numbers go down? You talked about 100x.
I hope so.
And is it a good thing if that froth goes down? Because from what you're describing, it's not necessarily that JM Financial has done something which was illegal. Power of attorney is not, not allowed per se.
It protects them. It basically, see, what RBI is saying, you're lending to yourself. Effectively, you're lending to a customer into an account in which you have the power of attorney, and not that the customer can operate it. Only you can. This is downright crazy in the first place, right? But it protects JM Financial from the HNI taking away the money and using it somewhere else, because they never intended to give him the money in the first place. It was just money kept for building up the IPO book. so that it would get 100x or 200x, whatever. It was a so more people that do this, more likely the IPO
to the
gets
point
subscribed 100x.
To the point that Samina was making, if you're also running the IPO and then you're also helping people subscribe to it, then it works for you on both ends.
Yes. The investment banking makes business. So the thing is, this like you guys said, it was a well-oiled machine, and I think really that this 100x numbers should come down. They should come down to what people can. Why are people borrowing out of their means, even if they're HNIs, to fund into IPOs? There was a certain startup founder who made a big scene because he didn't get this financing.
Yes.
He has since, of course, been fired and all sorts of things have happened. But the thing is, it was considered so normal that people were angry if you didn't get it. Kotak actually said they won't do it. They will not finance this. And that's why, this whole scene happened. So it was considered normal. I think it is not correct. Now, as I'm biased, as a PMS manager, we cannot apply to IPOs, so we don't get any benefit of any of this. So in that sense, we are not, a direct beneficiary of any of either the regulation or the whatever was previous. And I don't have any holding in JM either. But I think this, as an industry thing, it's not a good thing to say 100x oversubscribed when 100x was actually not really meaning 100x.
Deepak, do you think this, and this is where I get confused, right? So if our problem is leverage, which we're very clearly stating, and there's the froth in the small and mid-cap space, which was, of course, the notification that came out a few weeks ago, was to protect retail investors. Now we are talking about ultra HNIs who have access to the likes of a JM, right? So while power of attorney is common, leverage is common, we see that with the big banks. So in HDFC, Kotak, they are broking arms. I don't know. I think power of attorney is relatively common. What are we trying to do? Are we trying to protect the retail investor? Are we trying to protect, reduce leverage? I'm not being able to understand what the end goal of the regulator here is, because all you're doing is protecting a very small community of ultra HNIs that actually fortunately have access to information and advisors.
Actually, I think of it another way. I don't think HNIs or even these guys have access to much, honestly, a lot more information, because otherwise they'd make money for themselves instead of giving it away to other people. But to be honest, one of the things that happens in these cases, it's a self-propagating thing, right? So you get one IPO to go 100x and every IPO wants to go 100x and so on. The problem here is not of retail investors. What I think the RBI is bridging, and I like that, is systemic leverage, which increases dramatically during an IPO and then fades away immediately after, because so if you look at, for instance, JM Financial and all that, they only reveal the results once a quarter. If they were doing weekly results for whatever reason, you would notice on these IPO weeks their balance sheet would increase dramatically and then come back down. This was done because they were thinking, we have the power of attorney to the underlying account. This money doesn't go anywhere. It is just kept in a bank account, and that bank account will be used only to fund the IPO and not for anything else. What if there is a court issue, there is something that happens with an IPO, SEBI stops the IPO, for instance, the money of the investors is stuck for 2 weeks. You have a problem. The leverage is so much, it was never intended to be given in the first place. It will not just affect the NBFC, it will affect everybody in the financial system.
Agreed.
People who have lent to the NBFC, the HNIs themselves, other stuff. So that's where the problem is, I think. Everything else seems to be a smokescreen. I may be wrong here.
Got it. Deepak, just one quick question, really, Niraj here, before we thank you. These are steps that can be pulled back. It's not something that is unthinkable for a broking house or an investment bank to pull back a little bit. So what will happen is effectively a loss of business, not entirely closure of business. Would that be a fair assessment?
I think to the extent that whatever has happened now is just an order on JM and eventually it will come back. There are no systemic rules kept in place that you can't do this anymore.
Exactly.
For instance, banks can't do this because they can only finance against shares of up to 20 lakhs. So banks weren't doing any IPO financing, only NBFCs were. That was a regulatory arbitrage.
Got it.
RBI can easily plug it and say even banks, even NBFCs can't do it. This will affect a lot of things downstream. It will affect even the secondary market, because people are only able to borrow against shares through NBFCs, and then the whole stock market will kind of hurt, because even good leverage is taken out of the system, right? So if you leverage yourself only 50%, it's not a bad thing, but you'll have to take that also out of the game. So I think that is the impact for the system. GM, I think from a revenue perspective, they'll find their way back. Unless there is a systemic rule that comes into place, I think the money that's supposedly not made in the next quarter will be made in subsequent quarters.
Subsequent quarters, true. And as you said, Deepak, markets have a way of finding out measures when they need to. But thanks for putting all of this into perspective. Really appreciate your time, Deepak, Shenoy.
Thank you so much, Tamanna.
All right. On the note that the Bank Nifty is actually doing well for a second day on a trot, just before we take that break, pull up the Bank Nifty, pull up HDFC Bank. There is some sparkling moves out there relative to the rest of the market. HDFC Bank is indeed, in some sense, leading the way for the Bank Nifty. Take a break. We talk about metals on the other side. A special guest, Rakesh Arora from Go India Stocks, giving us his views. Stay tuned.
Hello and welcome. You're watching India Market Open. We are putting the focus now on a couple of these metal stocks that have been, showing up with a mixed trend. We have with us Rakesh Arora now, founder of www.goindiastocks.com, who joins in. Rakesh, thank you very much for taking the time out and meeting with and talking to us today. Rakesh, I want to start with the report that CLSA has put out, where they said that while metals are looking good, steel is not looking great, and they've actually downgraded counters like a Tata Steel. Do you feel the same? Do you feel like the road ahead for steel companies may be tougher than it is for the rest of the metal pack?
We are kind of a very slow period where nothing much is happening, and the enthusiasm which metal stocks have been showing is not really getting reciprocated by the physical market. If you look at the physical market, there's a lack of demand. The inventories are piling up, margins are going down, but the stock market is going in a different direction. Obviously, there was a lot of hope that China's stimulus might come through, but yesterday the announcements which have come in from China doesn't really enthuse any confidence that there's any big catalyst coming in which can push commodity prices up. So overall, I would say that market has gone ahead of itself, and it might probably correct into Q4 results.
Rakesh, so hope trades seldom work out well unless followed by action. China is trying its best to try and do, or we believe China is trying its best, but let's say there are some measures that China is taking in order to spur the economy. You seem to believe that those measures aren't turning out to be enough based on the data that is coming out.
Yeah, meaning the stimulus or whatever spending they are doing in terms of infrastructure, etc., is no more than what they were doing in 2023. So there's hardly any extra which is coming up than what they were already doing. And post the Chinese New Year, meaning the demand hasn't really picked up at all in China. The consumer confidence is extremely low. So even if you are putting in a little bit of stimulus, it's not really working out. Unemployment rates at all-time high in China. So it's not an easy puzzle to solve for the government. They are trying to control leverage. They're not trying to go overboard, and they are willing to grind through it. So that really augurs not that great for a commodity market, and probably we are into that snooze zone where margins are compressed and can stay compressed for much longer.
Well, I know, Niraj asked you about the demand in China and the stimulus that's coming there, which isn't really helping the sector. What happens to local factors and local demand? Because of this big trust on infrastructure, elections around the corner, there's a lot that's also working for us in isolation, away from the global setup. Do you not think that is enough impetus to buy some of these counters for the medium term? Maybe not for the next couple of quarters, but a little more dated in that sense. So maybe from a 1 year of time horizon, some of these steel counters may still look attractive, you think?
So see, what happens is that in an election year, government tries to upfront the expenditure. And that is what really happened. We had a very strong growth in the first 8-9 months of the year. And now things are starting to slow down because budgets are getting exhausted. As we get very close to the election, probably the emphasis will be more on announcement rather than executions. And this trend can continue for a few months post the election also. So next 5-6 months, probably demand is going to be slightly weaker. And that is what we are seeing at the moment, meaning we have dropped from a high double digit in growth, both for steel and cement, etc., now to low single digits.
Okay. We're so out of time, but Rakesh, would love to do an extended conversation some other point of time too, but I'd have to ask this to you. If you are not constructive on metals by and large, is there any subset or pocket that might be attractive within this commodity landscape? Because we're seeing metals, almost all forms, ferrous or non-ferrous, not quite seeing any gusto. So is it a blanket avoid on the entire pocket?
So Niraj, at the moment, the future metals which are, have a bearing from renewable sector, etc., there we are seeing a slowdown in adoption of, transition to the new economy. At the same time, there's a little bit of lack of investment into older economy. So both things put together, nothing is actually working right now. And markets have gone up way ahead of themselves. So I think at the moment, it's better to trim your positions in the market.
Okay.
20-second, Rakesh. Is there any stock in the metal pack that you're constructive on right now?
See, nothing is value.
Wow, okay. Rakesh, we will definitely want to talk to you further in an extensive conversation, understand what's happening in the metal sector, but hopefully we'll connect back soon. With that, we're completely out of time. Up next is Talking Point with Niraj Shah on the other side, so stay tuned.
Hello and welcome to Talking Point. I'm your host, Niraj Shah. And the case for a chat today, well, after all the regulatory actions that we've seen coming up in the recent past, there was anyways a question around valuations. So therefore, one primary question, are markets due for a correction? I don't think anybody can answer that per se. I think our guest can merely talk about whether the risks are on the upside or the downside, but we'll try and ask our guest about that. Will headwinds continue for financials, considering that there is a fair degree of coordinated action happening between regulators as well? And we've seen some statements around practices by a couple of NBFCs in the last couple of days. And of course, our guest today spoke about multiple emerging themes over the last 2 or 3 years, well ahead of the street. We'll try and ask him if there is emerging themes, or there are emerging themes that is looking at constructively. Our guest is Hiren Ved, Director and CIO, Alchemy Capital. Hiren, so good having you. Thanks for taking the time out.
Thanks, Niraj. Thanks to be back again.
Yep, great to have you back. Hiren, the age-old question, which usually doesn't have an answer, and I wouldn't hold you to it, but just looking at the concoction of events wherein global growth isn't quite firing, China data isn't the best currently, our valuations are not necessarily cheap, even if not dramatically expensive, and there is some regulatory action being taken or voices being sounded out even by AMFI around the valuations at the broader end of the spectrum. Is there reason to be cautious?
So, Niraj, I've been saying this from the beginning of the year that because we've had such a strong run-up in the markets, it's almost become fashionable to be cautious going into early this year, right? And I'm not saying for a moment that one should throw caution to the winds. Obviously, we have to be cautious in terms of where we are investing. You are absolutely right. We are not cheap, but we are not expensive either. And I think we have been saying this for a while, that whether you look at the last 9 months of this fiscal year, the way the broader market earnings have panned out, or if you look at a 4-year picture from COVID till now, it's quite staggering how earnings for the top 500 companies have grown, right? They've almost compounded at 38% a year. So if you take the Nifty 500 companies, the 4-year compounding, if I were to annualize the first 9 months and then look at March 20 to March 24, we've seen a pretty staggering compounding of earnings. So to that extent, the fundamentals of this bull market are very solid. They are based on earnings. Now, obviously, in any bull market, we do see excesses which build up. There can be pockets of exuberance. We are seeing in this market that, a lot of the returns, because of the high visibility over the next few years, could be front-loaded, right? And therefore, obviously, this market can be susceptible to both price and time-wise correction. So it's quite possible that may happen. And to me, it looks like that, there is, as you mentioned, a coordinated regulatory action to kind of preempt any bubbles or so-called excesses that might happen in any part of the market, right? So I think these kind of cautions, breaks within bull markets are actually healthy, because then, people tend to dial back. If there is unbridled fear, and if every day and every week the markets keep going up, it's a sure recipe for building up of bubbles. So I think occasional cautions, whether it is external intervention or corrections because of, whatever global macro or whatever, is actually good in a bull market. But I think this bull market is alive and kicking. Yes, we should all be responsible and cautious. But I don't think that it's going to change the basic direction of this market. I think we are very clear. We are in a solid bull market.
And viewers, to be fair, while the markets have rallied, even at this 21,200, 300 levels when we first spoke to Hiren, when the concerns were existing as well, I think I've heard concerns about markets all the way in the last 2,000 points on the Nifty, that are we overvalued, are we stretched, etc. He had mentioned that he's constructive, and conversation can be replayed wherein he was in the studio, and I think it's worked out well. So Hiren, good call there, and I'll look forward to hopefully the market staying steady and creating wealth. Specific pockets, Hiren, and I wonder if the consistent commentary from the regulator around the need for caution in lending practices, in certain actions being taken by NBFCs, whether lending NBFCs or in yesterday's case a non-lending NBFC as well. Is there a message being sent to the lending system at large to be cautious? Could that impact growth rates? Could that impact valuations? Because investors like yourself might be saying that what's the need to go out and buy NBFCs at premium valuations when there is an overhang of regulation?
I think you're absolutely right, Niraj. All the recent actions by the regulator point to the fact that they want to preemptively cool down unbridled, unsecured lending, right? Now, whether it comes by way of soft advice, whether it comes by way of, strictures when it comes to adhering to certain, operational processes and risk management processes, I think that this will definitely take the focus of the lending institutions away from growth to sort of look at their internal controls and processes, and it may impact growth in the short to medium term. In the long run, it's all good because, strict regulation is painful initially, but it's always beneficial in the long run. But unfortunately, there is a cost to be paid. And the cost for that would be in terms of growth, we don't know. We'll have to, watch the fourth quarter numbers and then look at it. But certainly, I think all the players will be, focused on kind of getting, getting their house in order, re-looking at their systems and processes. And I do believe that this is an environment in which it is quite difficult for the sector to deliver returns in the near to medium term. I use this analogy that the financial services industry may be going through its US FDA moment, right? So if you know what I'm saying, in 2015 and 16 when similar regulatory interventions were done in the pharma industry, first we thought, it's just, one-off plant, one-off company. And then one after the other, you had almost every pharma company coming under very severe scrutiny. Obviously, the intensity was different. In some cases, they got an import alert. And now something similar is happening, that the RBI is, actually asking you to stop a certain line of business, right? Obviously, that's going to impact growth. And to some extent in the near term, it could even impact the sentiment for the sector. As I said, longer run, it's all good. But in the short to medium term, I do believe it will have an impact.
I like the correlation, the US FDA moment for the financial services industry. Could banks thrive in such a scenario, though, Hiren? Because they've kind of taken it on the chin for the last, if not taken it on the chin, certainly have stagnated or gotten devalued, at least the larger ones, in the last 6 to 12 odd months. Could it be their moment? People are looking for quality financials which are not impacted, which have got good practices, and which have growth which is reasonable. Could the HDFCs, Kotaks, ICICIs thrive in such a scenario?
Well, I think, they also got a rap on their knuckles at some point in time, right? So I hope that it's not one versus another. But yeah, I mean, I think, for funds which to some extent have to be benchmarked to a certain weight in the sector, and they can't go completely underweight or zero weight, right? There will be some rotation away from, let us say, the NBFCs to the bigger banks, because there might be a perceived safety there. But, I mean, my big point, Niraj, has been that I think overall, private financials were the leaders of the previous bull market. And that's a space which had done quite well between, let's say, 2010 and up until, COVID. And then obviously because of COVID, there was a disruption. But, most of them had to make heavy provisions, had to raise capital. But broadly speaking, if you look at it, that entire lot has underperformed the market. And my sense is that, their sheer weight in the index kind of has peaked at 37, 38%. And while I'm not making a case by saying that they won't deliver returns, I think they will, quality financials will deliver returns. But if I take a slightly longer term view, my sense is that their relative weight in the index, will keep falling. And some of the other sectors in the index whose weight was highly compressed will actually relatively rise, right? So I think that there will be bouts where these companies will deliver both absolute and relative returns. But if I take a slightly, 5-7 year picture, my sense is that they will broadly underperform the market.
Okay, so viewers, we take a break then because we have to do that, but we talk about this aspect. What are those which will see a rise in their weightages and relative market caps over the course of the decade? That's the very interesting question and conversation coming up with Hiren Ved on the other side. Stay tuned. back with Talking Point. Now, before we talk about the sectors which will gain, let's talk about something that is sulking. Citi, in its note, has put out today that a minister, the minister is quoted as saying that they are concerned about the fact that the benefits of lower gas prices have not percolated down to the end consumers, and they will not be hesitating in taking any drastic action. As a result of which, Mahanagar Gas has corrected quite significantly. In fact, some of the others too. They've also cut gas prices. Mika, fill us in on the details.
Yes, so most of the gas stocks are in the red, and Mahanagar Gas is the top loser in terms of that. It's down about 12.9%. So Citi's note basically, it downgraded Mahanagar Gas to a sell rating. It also cut the target price by 5% to 1,405 rupees. Now, this was back on regulatory risk on the company's margins. Why the worries were prevalent for Citi is because of the latest statements made by an oil minister in an industry event where the minister said that the full benefit of the gas reforms have not been passed to the end consumer, and that the government is willing to take measures, even drastic steps, in order to ensure the full benefit for the consumers. Why does Mahanagar Gas stand to lose the most is mainly because of their premium EBITDA margins that they do enjoy versus its peers. Citi highlighted that the per unit EBITDA margin of Mahanagar currently stands at rupees 13 per standard cubic meter of gas, while that of Indraprastha Gas and Gujarat Gas stand at rupees 8 and rupees 5. So any drastic steps could renew concerns about exclusivity and the margins and impact Mahanagar Gas even more. Additionally, lastly, the Petroleum and Natural Gas Regulatory Board in Feb did announce that they will be getting a high expert level committee to look at the CGD framework, and this also raised more concerns in terms of how the impact would be margin life for the companies.
Mika, thanks for that. Hiren, can I bring you in on this? Market generally doesn't like regulatory action. Is this a sign that the market is giving that we're not pleased by comments from a minister who says that we'll not be hesitating to take drastic steps for achieving our ends?
So, this is a very potent time where the government wants, especially where there is any sector that reaches the end consumer, like a B2C sector. The government would want that if there are any input benefits or other benefits, then those should be passed on to the end consumer. We must understand that usually during election times, the tolerance for inflation or anything that is inflationary is very, very low. And while in general this government has stayed away from intervening, but I think this is usually a very sensitive time where pre-election they don't want any flare-up in inflation anywhere. Look at a series of things that they've done, right? So for example, it's quite possible, and it has happened so many times that you will see that, if there are certain agri-commodities which are likely to see an increase in prices because of either weather issues or production issues, they would ban exports, right? They did it for some variety of rice. Then they came up with an ethanol policy where they said that you can't use sugarcane to make ethanol because they realized that sugar prices could go up. I think if you look at the sum total of the picture, it is very clear that when it comes down to B2C industries and where it impacts the common man, I think the government would want that any benefits that arise, whether because of taxation, whether because of input costs, needs to be finally passed on to the end consumer, right? So all of that is what I look at is part of the same theme that, they want the impact of inflation to be felt lower onto the general populace.
Fair point. Now, Viren, I drive back to the point that you made in the first part of our conversation. Weightages. We're looking at weightages since 2004. If financials as a weightage has to go off, what could possibly come in? What are your thoughts here? Just add it up with a view on energy, because when we looked at what happened in the last 20 years, energy has had this very large weightage, which has dropped quite considerably now. Is that one of the themes as well that come to the fore?
Yeah, you're absolutely right. So if you look at the weightages from 2003 to 2019-20, right, the weight of financials went from 15 to almost 40%, right? And now they are receding. While the weight of so-called cyclicals, and cyclicals, you put 4 or 5 sectors in that, which includes power, energy, capital goods, autos, real estate, infra, cement, right? What you call as industrials or cyclicals or, energy, the weightage of that, all these sectors put together, had fallen from 67% in 2003 to almost 30%. And this had happened when the markets had gone up 7 times, right? So I think the time has come where weightages of these sectors are likely to slowly and steadily move up in the indices. And therefore, I think with the